We are back, and we are going to get into the loan situation as far as interest rates and costs, and I think you touched briefly on the upfront fees. I know that. Could you explain a little bit more about that, what they were and what they are not now, and if the interest rates are a little bit higher, and what the what the cost is, because this is always a problem, and it has to be figured in the business plan, which is going to be discussed with SCORE at some point.
The interest rates are dictated by legislation, and we encourage banks to keep them as low as possible.
But that may not be a good thing. So you have the Congress now dictating how much?
Well, it's prime plus a certain percentage.
Okay.
So right now prime is.
Does that change every year? Is that?
It changes every time prime changes, and most
I'm
of the
saying
time,
the limit over prime, has that changed?
No.
Okay.
That's fixed.
So they've set that already.
That's set.
Okay.
So for the smaller the loan, the higher the interest rate. Banks are going to charge prime plus a higher amount because they have to do just as much paperwork for a small loan as they do a large loan. And banks are in the business to make money.
Right.
So for an existing business owner who's got a great relationship with his lender, he's probably looking at prime plus 1. If you're a startup, you're going to go a little higher. The maximum we allow a bank to charge for any of our loan programs is if the loan is under $25,000 and the bank is using our Express product, it's prime plus 6 1/4. Now that's really high.
That's pretty heavy, yeah.
We very seldom ever see anything go that high. Most of the time it's...
That might blow out a business model if it's that high.
It's usually between prime plus 1 and prime plus 2. Now we have the small lenders who like to make the loans between $5,000 and $25,000. They will do prime plus 4 1/4. But prime plus 4 1/4 is not that much when you're talking about a $10,000 loan spread out over 10 years. Now the key with SBA loans is by taking some of this risk away from the bank, we're encouraging the lender to make a longer term loan. So if a bank wants to make you, let's say a loan for 3 years, and you've done your business plan and you've done your cash flow projections and you know that it's going to take you at least 5 years to get to the point where you're comfortable, and that a shorter term is really going to put you in a cash crunch, don't take a 3-year term. That's when you ask your banker, well, would you consider doing a 5-year loan if this went SBA?
So that's the big benefit, is extending the term, making the monthly payments lower, which gives you a little bit more, you have your capital freed up.
Exactly.
If I could add one thing.
Sure.
While the interest rate sounds high, when you add the extended term that is available, it makes it a very attractive payment. And many small businesses, I know from speaking to them, have alternative is to finance with credit cards. So when you match up the availability of a credit card financed business loan of some form and what's available, there's really no comparison.
And two, what a lot of businesses have found out now is they've been operating their businesses with lines of credit. And in the credit crunch, the banks have just canceled lines of credit. So they've been using lines of credit to finance inventory, finance employees.
Sort of like an overdraft.
Yeah, and it's gone. If you have a term loan for 7 years,
you know what your fixed costs are.
You got the money sitting in the bank, and you know what you're using it for. And so now a lot of business owners are scrambling. They want to find a term loan, and the credit is dried up. We've made half the number of loans we've made at this point last year.
Really? So loan demand has dropped off by 50%.
Not just loan demand, it's just the banks aren't willing to lend the money.
Well, I think it's not necessarily they're not willing to lend the money. I think they're actually now being more prudent than they were.
Much more. Well, what used to be a good credit score of 650 for some banks is now 700. The banks that wanted 700 want 750.
That's becoming an issue because everybody's credit scores are going down because credit cards are being withdrawn and or the limits are being reduced.
Exactly.
So now that's another whole
and their interest rates are going
effect.
up on the credit cards.
Interest rates are going up. That's another issue. Let's discuss the relationship with SCORE and SBA, and you both are here, and I know what SCORE does now. I know you're consultants, and you basically are the guarantor of the funds, okay? The guarantor of the funds, excuse me, the guarantor of the funds. What is the relationship between SCORE and SBA? Because I know you are a government agency, and SCORE is a volunteer agency, but somebody must pay SCORE's expenses.
We do.
Okay, well, yeah, well, let's have Gil talk about that, and what is the relationship there, and how do you...
Well, I think you basically described it. They have programs such as the ones you've been talking about that are available, and we know about those, so we are providing a face-to-face interface. We're providing training and other resources for the entrepreneur to draw upon in order to either make themselves available of the guarantees or just to be successful in their operations. Both SCORE and SBA have very useful websites that have a lot of information on them regarding business plans, marketing plans, a wide variety of resources that are just available by accessing the websites.
So as in any good project, preparation is key. So you prepare the business person, okay? Once that person is prepared in business plans and his business model, then you go to the money person, which is the SBA.
Well, if they need money, but not all cases do they need money, but if that were the case.
Oh, so there are some cases where they'll come to you, and after analysis you say you don't even need money, you just have to reorganize
they may already have money. They may have a lot of small businesses fund themselves through friends and family. They may be in a business, as was pointed out earlier, that really is not a high capital requirement. There are a variety of situations where they may not need money, but frequently there is a need.
Well, let's talk about existing businesses, or let's say somebody wants to buy an existing business. Can you help them in the valuation of that business?
Yeah, we can provide them the direction. We can ask the questions of the types of information they need, make sure they're thinking through the various elements that we see that could be risk that they need to understand and be willing to deal with in one form or another. We can provide them the same kind of guidance as if they were coming to start up a business, but in the case of existing business, we have the financial information.
You won't do a business appraisal, but you tell them where to get a business appraisal.
No, we're not professional appraisers. We understand that process. We know the various elements of valuation. We would generally probably know some of the general parameters that could provide some level of guidance, but if it turns out that they need a professional appraisal or valuation of the business, we would assist them in locating and identifying someone who could do that for them.
So I'm sorry.
There's several score counselors who are financial experts, and they can provide some parameters. We don't want to, and SCORE and our other counselors, provide direct input. It's up to the business owner to make the decisions, but when you provide different parameters.
You give them all the options, and this way they can.
And things to think about. Like we had a situation recently, Congress has changed some of our rulings as it comes to goodwill. When you buy a business, you're buying a lot of goodwill. You know, let's say, for example, you're buying a hair franchise from somebody, and it's $75,000. Well, the equipment in it's only worth $5,000. So what are you buying? You're buying goodwill, and you're financing that goodwill. Is it really worth $75,000? How do you determine if it's worth $75,000? There's a lot of formulas to figure out what that is, but too many business owners get too excited, and they're like, I know it's worth $75,000, and I've got to get it because he's going to sell it to somebody else, and they don't stop and think.
So you give them a reality check.
A reality check, and remember, everything right now is negotiable.
And I think one other thing is we're not so much sitting there giving advice like you've come in and so we're going to lecture you on our opinion about what you're doing. We're going to challenge you in your thought process. Was it complete enough? Have you thought about these questions? Because ultimately you're going to be running the business. We're not going to be there with you. And so we're going to challenge you with questions about your thought process, the information you've assembled. Was it complete? Are these the conclusions that you're comfortable with? Have you thought about other elements of the whole practice? So that's our role. It's not so much to be a teacher per se, but provide them resources, help them understand how to use those resources, perhaps some interpretation.
We are going to take a short break. We're going to come back with some more questions for both of you. Thank you. We'll be right back.